Hello, everybody. My name is Joey from the Chart Guys here for a midweek evening check in. Going to take a look at the markets here. We've got a ton of rotation going on, going to detail where that rotation is, what it means for the markets. Going to take a look at the semiconductor sector. Everybody obviously has eyes on semis and memory as that's been driving this bull market. It's no secret that they're cooling off, and the question is, are they cooked? So let's go on and get into the charts. We'll start with the S&P 500, bigger picture here. We are still just tightening up in an equilibrium, and as long as that's the case, then the markets remain healthy. So we can zoom out to the weekly and use the weekly 12 EMA as a guide as well. And until that is lost, then bulls are happy to just go sideways after a beastly move off the lows, and there's no monthly consolidation shaping up with these higher lows continuing to form. So not going to think too much about what's going on within here trend wise on the S&P 500 while we're within balance, as is typically the case within balance. You don't want to be leaning too much on your smaller nested time frame trend changes, because part of the nature of balance is that we are going to see less clarity, less follow through, chop as some people would call it. So that's why you need a balancing playbook: long off the lows, short off the highs, and small positions, loose stops. That's my personal balancing playbook, and I'm either doing that or I'm not trading it. So moving on, just to keep the show on the road here, we've got the Nasdaq had a similar two-day tightening range that has now broken bare without follow through. So ultimately, we're still within balance, and this is the portion of the playbook that is important of small positions, loose stops, because it's not exactly hard levels that you're playing off of within here. You certainly can, but we know the character of inside bars on larger time frames are that you are going to see less clarity. You're going to see less follow through. You're going to see trends not indicate what they would otherwise in a trending environment. So this is another part of the scenario that Dan's been talking about, where we could see the bear break on the Nasdaq, but the hold on the S&P 500 of this pattern, and that would lead to a lack of follow through on the Nasdaq. So that's one way to look at it as well. Also, we've just got our weekly 12 EMA. So we're going sideways and we're bouncing from the weekly 12 EMA. So you will see this a lot of times when you have a larger time frame EMA rider. The trends on the smaller time frame might be misleading. Like we had a good example of it on ATAI back here, where it was a 2-day 12 EMA rider. And if you watch the 2-day 12 EMA, you're not getting faked out on anything. But if you're in on the daily, there's multiple times within here that you get a daily downtrend. And it's like, oh, well, that's no good. Shift in character, right? But no, it's about identifying the status quo and then leaning on your status quo. So it doesn't mean don't pay attention to the levels within. I was certainly watching this daily support as it broke on the NASDAQ. But then the question becomes, does previous support act as resistance? If it acts as resistance, then that's what bears need to start to paint the framework for a bear break, and then have it act as resistance, and then bear break, have it act as resistance, and then actually move down. But if it doesn't, then you say, oh, well, this is just more balancing type behavior, and it's a bear break without follow through. So we got a daily bounce underway at this point. Long off the lows, short off the highs. It works until it doesn't. So, in my opinion, the main thing that is going to drive whether the NASDAQ can hold healthy sideways or not is, do the semiconductors stay healthy, bigger picture, or do we get monthly consolidation underway? So, we are at a crucial spot, and you guessed it, it's the weekly 12 EMA. So, if the weekly 12 EMA holds on SMH, then no monthly consolidation is shaping up, and this is healthy sideways action after a beast of a move. And the fact that we're seeing rotation into everything else makes it all the healthier for the broad market as a whole. So this is really the mindset that you want to have on rotation. A lot of people like to tie these feelings that up is good and down is bad. And from an investor perspective, I understand that a little bit more. But from a trader's perspective, you just want to make sure you're not on the wrong side when something happens. We know that we will see monthly consolidation. Is monthly consolidation bad? No, it's part of a healthy chart. If you want to go for a whole AI super cycle, you're going to have monthly consolidation. You're going to have big pullbacks. That's not bad. That's healthy for a chart. Is it bad if you get levered to the you know what's and that's moving against you? Yeah. So you as a trader just want to make sure that you're listening when the market speaks and make adjustments as the market tells you that you ought to be making adjustments. So this was a tweet I put out last week about the rotation going on. So big time rotation. We've got continuation of the shift that ended the prior week, which was semiconductors and memory out, financials, healthcare, Magnificent Seven, software, biotech in. So it's bad for your leaders, good for your laggards, and great for overall market health. So that's how we want to view these things. You want to view it as a team player for the market as a whole. I don't know why in crypto, it seems like everybody's a lot more down to be on the team mindset because crypto is kind of its little outcast area of the market as it is. But that's alt season. You get Bitcoin, it leads the way up. Bitcoin goes sideways, and that money rotates out into everybody else, and people cheer it on in crypto. But in the broad market, it seems like the teams are more divided. Not as many people are doing what goes on in the chart guys, where we're just going to where rotation is and whatnot. So you want to embrace it. You just cannot fight it. So follow me on Twitter if you're not. Jungle Funk underscore. Lots of good stuff there on my Twitter account. So yeah, we're bouncing clean from the weekly 12 EMA, and that's the line in the sand now. If we lose 566 and follow through to take out 554, then that's monthly consolidation shaping up in semiconductors. It won't be surprising the next time it comes, but burden of proof is obviously on bears. Could be in the form of a bit of a 3-day head and shoulders type pattern if we get this bounce underway and then bears defend 671 all-time high. But for now, we'll just go one step at a time. It's a daily bounce, and we'll watch retracement size. If we bounce over the 50% retrace, odds decrease of that head and shoulders and in turn monthly consolidation. So you've got a whole slew of semiconductors bouncing from their weekly 12 EMAs. You got like weekly 12 EMA gang, and then you have the gang that's kind of been holding things up while weekly 12 EMA gang went down, because you're seeing intersector rotation, not just or intrasector rotation, excuse me, not just intersector rotation from semiconductors to financials to healthcare. You're not just seeing that, you're seeing rotation within. So, I mean, if we look at the AMD SMH ratio, that was made a fresh push up on Monday to new 2026 highs at this point. So you're seeing rotation within, and that was AMD ultimately holding on pretty well, all things considered, when you had leaders like MU. Surely I've got MU on here. Nope, we got to type it in. I don't know how that didn't make its way to the list. Yeah, leaders like MU down substantially off the top now, 28%. And then you've got AMD holding pat, holding sideways. You've got TSM holding pat, holding sideways. You got AVGO already paid what it owed off the top, coming down from earnings, holding pat, going sideways. And now with a little relative strength. NVDA, kind of similar to AVGO, already paid what it owed off the top. So when SMH is really has the potential to totally come unglued, because you got big names coming down off of the top. Then you have names that have been coming off stepping in. So intrasector rotation, intersector rotation. So are semiconductors cooked? No, they're not cooked. Are they going to be cooked if we see monthly consolidation? No, they're not. The AI revolution is upon us, and we know it's on the backs of semiconductors. So what would it take for them to actually be cooked? I don't even know at this point. But from a trading perspective, for them to be cooked, we would need a monthly downtrend, in my opinion. You just need to make sure that you're not fighting weekly consolidation, not fighting monthly consolidation. So let's zoom out a little bit. We'll look at this weekly time frame. We'll look at our weekly 12 EMA crew. You've got MU bouncing from just above weekly 12 EMA. You got SNDK bouncing from weekly 12 EMA. You've got INTC bouncing from weekly 12 EMA. Do have to watch out for a potential weekly head and shoulders there, but not going to worry about that as long as weekly 12 EMA is holding. You got LRCX weekly 12 EMA gang, KLAC weekly 12 EMA gang. You got AMD holding on a bit above. You got AVGO taking some rotation. And AVGO, if you're talking about intrasector rotation, we're a monthly 12 EMA rider. We're coming down. It's like a daily falling wedge into monthly 12 EMA, now breaking bull. That could be a place where rotation comes on back. And remember, only a handful of weeks ago that this was a pure leader, getting a laggard breakout. Derailed by earnings, of course, but there's opportunities for everybody here, and TSM is similar to AMD. It's, I don't want to say similar to AMD because AMD's been a clearer leader, where TSM has kind of been stalling out here the last couple months, but it's in the same category of holding on sideways while the rest of semiconductors go down. So to take a step back here to SMH and to fork off into what we're talking about elsewhere, we've got a 2-day bounce underway. Well, on a gap down and then a day of bounce. If we look at XLF, you had a gap up and then 2 days of consolidation. If we look at XLV, you had a gap up and now 2 days of consolidation. It's picture perfect rotation around the markets, and that is exactly what you want to see for broad market health. So to keep it simple on XLF, we're watching daily 12 EMA rider. Pretty solid move down here today, not bouncing or seeing only a dinky bounce from hourly oversold conditions. And for me, the big question on XLF and XLV is, what are these ratio charts going to do? We're at a crucial spot. We're rejecting from the monthly 12, or we've been rejecting from the monthly 12 EMA historically on the ratio charts, and now we're up at them. If we reject from XLF SPY on the monthly 12 EMA, I said that a little backwards, but you get the point, then we're going to see relative weakness come back into financials. If we reject from monthly 12 EMA on XLV SPY, then we are going to see relative weakness come back into healthcare. So keep an eye on these ratios as our guiding light, just as we were keeping eyes on them at the bottom to let us know that, okay, the rotation game into financials is on. The rotation game into XLV is on. And with that, if money's rotating from that, then we have to be careful on semiconductors, because remember, when that rotation started, it was, I want to say it was the 3rd, but I don't think that's right. Let's just go look at the XLV SPY ratio, or XLF SPY ratio. Thought it was June 3rd that we got over. No, it was June 4th. Okay. Yeah, so June 4th that we get over on the ratio chart, and SMH is still healthy from there. And we haven't gone anywhere since that rotation started. It's just like crypto. You go sideways, you see everybody else get a turn. And the question always, once you see that, is, okay, do we have monthly consolidation take place in semiconductors while like weekly consolidation takes place in SMH or in healthcare and financials? If you get that and you get downside in unison, then yeah, the broad market's going to see a pretty solid pullback at that point. But if it continues to just be this yin and yang, this clean passing of the torch, then the broad market can stay healthy and just chug on. So we'll continue to watch that. Is this the end of the rotation? This is going to be a weekly 12 EMA hold for SMH and the crew, and then weekly bull flag back to the top. We get XLF, XLV SPY ratios, reject from monthly 12 EMA. They did their job to let RSI levels cool off on our leaders, and then the leaders take the torch. Have to stay tuned. Nobody knows what that answer is going to be, but the ratio chart is going to make it very clear and guide the way for you. So I got an hourly uptrend on SMH. That's your guide for this bounce. Moving on. So gold continues to be weak. As I detailed in the weekend commodities video for Chart Guys members, we're just watching this 2-day 12 EMA. I know a lot of people are interested in metals, because we're down a lot off of the top, but it is very difficult to play against the trend in the metal space. So it's best to wait for bulls to prove something. And right now, they're just not proving anything. They're playing little rounds of defense, not seeing follow through on lower lows, but they're not getting uptrends and getting bounces underway. And even once bulls do get over 2-day 12 EMA, then it'll be zoom out to the weekly. And you just don't want to get lost in the illusion that lower is better. There were high probability times to buy metals over the last few years. We had bullishly crossed weekly EMAs, aside from a little stint here, for the better part of 2023 onwards. Now they're bear crossed. So you just got to trust what that, or trust and respect what that means historically, and know that we had no pun intended, a golden era of metals trading, one of the best ever in Q4 or in Q1 2021, one of the best ever. And that money is rotated elsewhere at this point, and you just got to respect that. So we've lost monthly 12 EMA, we've got bear crossed weekly EMAs, we've broken a quarterly stair step, which historically bodes very poorly after a 2.5+ run 2.5 year plus run on the quarterly. So I'm keeping it simple. If we're below 2-day 12 EMA, bears have tight control on gold. If we're below weekly 12 EMA, then bears have control on the monthly time frame on gold. If we get over weekly 12 EMA, we'll look for a monthly bounce, but then we'll be looking for a monthly lower high. That's the thing. Damage is done here. Even if we get the best case scenario historically of a quarterly stair step that doesn't see much follow through, which these were much fewer consecutive quarterly candles, you're still talking a year and a half before you're back to new highs. Still talking, a year and a quarter until you're back to new all-time highs. So is gold going back to 6,000 soon? History would suggest no. So silver's a very similar boat. I know a lot of people are interested. We're 54% off the top, but we're in downtrends and we're weak. So that just is what it is. It's going to be the same deal as gold. Not going to repeat myself a whole ton. One thing that does stand out to me here is that previous support is acting as resistance. So that's what bears want to see on silver. Very open to getting more bullish in the intermediate term for metals, but we're just not there at the moment. Bear crossed EMAs for the first time in, let's see, when were we last convincingly? Well, we won't even go convincingly. We'll just go, when were we actually last crossed bear? But we went 439% on a commodity with these bull crossed. And then now we've crossed bear. So just got to chill a bit. Just got to chill a bit. On the note of chilling a bit, it's the same mindset that we had with oil. We were going sideways, healthy sideways consolidation. You broke bear. You say, okay, chill a bit. Let's be reactive. You can pay attention to areas of interest like the monthly 12 EMA, back test of previous resistance, which, again, talked about on, I don't have my Twitter up anymore, but called that one out there. But the move is to be reactive on this stuff. It doesn't mean just YOLO in at the monthly 12 EMA. If you did, it worked out here, but you don't want to make a habit of that. We had a 2-day stair step. You don't need to nail the bottom, and that's the beauty of stair steps. The market tells you when it's time to go. You break the 2-day stair step, up almost 10%. You had a 12-hour 12 EMA rider. Break the 12-hour 12 EMA rider, move up again, almost 10%. So reactive approach is the way to do it in commodities 100%, but truly in the markets in general. You will have a lot better chance of being right if you listen to what the market says and then act on it. And because then it's not contingent on you being right, it's contingent on the market meaning what it's saying. And the odds of that are so much higher than the odds of you being right on any given thing, and playing against the grain and banking on yourself being right while calling the market's bluff. Essentially, you're never going to be able to call the market's bluff at a rate that the market calls its own shots. So looking to see, the next step would be a daily uptrend on oil. If we're talking about a monthly higher low shaping up, you got to get your daily uptrend, got to get your weekly uptrend, got to break the high of the previous month. So we're, very likely looking into August before a monthly high or low can be set. It'd be most likely to break the high of July in August if that's going to happen. But we'll go one step at a time. And, on the note of rotation and staying on top of things, we've got our swing report and the chart guys headed off by Lamont, and he does a really good job in here dabbling around in different areas of the market. So this is an old CVX play that we had on here that ended up getting to its target, but we've got a fresh CVX play. I don't want to scroll up too high. This is the dashboard for the swing report that you get, and it shows you all your plays, your interest zones, your targets, your bail zones, and whatnot. And it's designed for you to be able to apply your own systems within, or look to apply just the general range, or just look to follow Lamont when he trades them, because live posts go out about that. But we've got CVX on there from a month ago or something like that, basically waiting for us to come back into an area of interest from a volume profile perspective. And that's something that gets put on the report, stays on the back burner for maybe 8 weeks. It was on the back burner or something like that. And now we've dipped right into the zone. We're bouncing from it. So yeah, definitely check out the swing report. Go to chartguys.com and look at the swing report. If you're looking for the sharpest guy from the chart guys to give you the plays that he's watching, you get a couple plays a week, and then he plays the best ones live. You get live updates on all of that. And yeah. So moving on to Bitcoin, we know it's been the weakest of the week for quite some time, and similar to metals here, not much follow through on lower lows, but it doesn't really mean anything if you can't confirm uptrends. So of course, falling wedge to be watching. Whoops. But you got to get over weekly EMAs. We got 2-day 12 EMA in the short term acting as resistance. If we get up and over that, then we're looking to weekly. You could say we got some form of little ugly inverse head and shoulders type going, but I'm not going to put much weight to it. I don't desire to nail a bottom in crypto. I don't desire to nail a bottom in metals. I'll just continue to focus on names that are showing me, hey, this is the place to be here and now, as opposed to waiting and fighting relative weakness. Another thing I just posted on Twitter recently, trading, it's like it's like sailing a sailboat. If you're a sailor, you go out on the water. Before you go out to sea, you say, do I have any wind to be able to sail? That's a trader saying, are we trending or are we balancing? If you're balancing and you try to deploy a trending playbook, you will get toasted. It's not going to work out well for you. You can be the best trend trader in the world, and if you deploy it in the wrong environment, you're not going to be able to do well. You can be the best sailor in the world. If you don't got a drop of wind, you're not going to be able to do that. So that's the first question. And then the second question is, all right, which way is the wind blowing? I need to get my sails situated, my course situated, to make sure that I'm leveraging this wind in a way that is going to be effective for me. And that's you as a trader going in and saying, okay, where's the relative strength? Where's the relative weakness? Because if you're battling against that, you're going to have a hard time. So yeah, we have a bounce underway for Bitcoin. The Bitcoin NASDAQ is seeing a little bit of a bounce, but the meme where it's like just a big dump, and then you get the little baby bounce down at the bottom, and then everyone's like, yeah, you don't want to fall into that. So I look forward to the day that crypto comes back on the map. It's right now just a small time frame relative strength bounce, giving a sliver of reprieve for the underlying, and that's that. So once it bottoms, people say, I told you it was the bottom, and I'll say, yeah, good job, congratulations on that. And that's genuine, that's not sarcasm. I always love to hear other people's successes, but for me personally, if I'm bottom hunting, it's not an efficient use of my time. I'll eventually get it and I'll say, hell yeah, I got the bottom. But that's after missing upside elsewhere, uh, testing my patience, testing my resilience by taking losses and getting stopped out and battling against the current, and I'll eventually get it and it'll feel good and whatever, but that satiates my ego. I look to satiate my account balance and just focus on what's going up. And then once crypto is bottomed, I'll show up and I'll party with everybody when it's time to win. When everybody's winning in crypto again, I'll show up and I'll win with y'all. But until then, I'm just not interested in fighting the current to look for a bottom. If we get historic RSI levels, I do. I get in there. Otherwise, I keep on fighting the good fight. I respect what y'all are doing, but I'm not going to be there with you. So let's see. We did XLF. We did XLV. Talking about the rotation, IGV, same deal. When we look at the SMH, gap down, 2 days of bounce. XLF, gap up, 2 days of consolidation. XLV, gap up, 2 days of consolidation. IGV, same deal. So question on IGV is, are we going to confirm a weekly downtrend from here and see a monthly lower high set? Or it's already set, but see follow through and more of this head and shoulders type thing that we got on Microsoft, we got on Oracle, a lot of software names seeing this similar look. So all about the weekly from here, or do bulls get a more convincing daily uptrend? I guess we've already got a dinky one, but to see weekly bounce follow through and decrease the odds that that can happen, time will tell. Looking at XBI continues to just trudge forward. Ended up being a superb scout on the ratio charts. And again, go back and watch this video if you didn't see the XBI call out before all of the action happened, derived just from the ratio chart most likely scenario on an EMA rider reversal. You couldn't have asked for it to play out better. So XBI continues to just be strong. These gap ups are not tanking it at this point. We're just riding 4 hour 12 EMA, daily stair step, little dinky daily uptrend. We did lose 4 hour 12 EMA here this afternoon, or morning rather, but then bounced into the afternoon after a clean hold. I mean, look, bears were going for it. Bears were going for that low. Bulls held it almost to the dollar, or I guess it is to the dollar, almost to the penny, and then saw a strong bounce. So got to take that out. Eyes will still be on hourly oversold conditions next time we see it on XBI. And that is that. So XLI pulling off here. Little rising wedge here into a bear break. And main thing to be watching on XLI is being mindful that we are looking for a monthly lower high on the ratio chart. And we got up in that territory and now we're pulling back. So is this the end of that little bout to relative strength for XLI? Very possibly. So looking at Tesla, and we'll keep the show on the road here. I know it's a later video. I don't want to go too long, but yeah, Tesla's action has been freaking crazy. The impulsive moves, the punishing moves to the upside, to the downside, back to the upside, back to the downside. Really crazy. So I don't really have any tips on trading this, but I do want to talk about you guessed it, the ratio chart, because I know a lot of folks got bamboozled buying this first dip, and very punishing dip, 100%. But this is what I'm saying about being a sailor, and you got to ask yourself, which way is the wind blowing? We've been talking about this Tesla QQQ ratio. It was all about the daily 12 EMA. And then once we got over the daily 12 EMA, boom, on Tesla, you had big time opportunity and several days of upside. But the shtick was going to be, we got to watch out for weekly 12 EMA after that. And this is the same thing we're watching out on XLF, SPY, XLV, SPY monthlies. At the time, we were watching out for that on Tesla QQQ weekly. And we got up, we're rejecting from Tesla QQQ ratio. So you just got to respect that, okay, I have relative weakness right now. I'm rejecting from the status quo on my ratio chart. I need to exercise some caution, play reactive, or at the very least not scale in or not risk more than what you're willing to risk. If you take a day loser trying to play aggressive on that, who cares? We all take day losers all the time, but you don't want to get caught up on what ultimately is kind of an anomaly style day when you've got a mega cap pretty much going straight down 7%, 10%. I mean, yeah, not pretty. And then the brutal part of it is everybody got smoked on this day, took their losses before the close, and then it retraced 70% of it the very next day. Brutal. So that's that. CCJ, potential falling wedge here if bulls show up now. So keep an eyes on that. It's kind of trading like metals at this point. So keep an eyes on that. Not much more to say there. SPCX, new lows, not follow through or no follow through at this point. Didn't get much follow through on the bounce off of these lows here, but yeah, if we start to form a very clear pattern, I'll start paying more attention to SPCX, but I'm not going to get caught up paying too much attention just because it's a new name. But on the note of new names, there's a new quantum name in the house, Quantinium, and it's a new IPO that is holding on well while the space is going down. QBTS, the space is going down. IONQ, we're going down. RGTI, we're going down. And you've got QBTS going up, or not QBTS, QNT going up against a weakening NASDAQ and against a weakening semiconductor space. Not that quantum is semis, but there's the general high tech areas, if you will, have been going down, and QNT is going up. So, and it's just a new IPO that is not crap in the bed. We haven't seen that really in a while. So, add QNT to your watch list. It's got fine volume. I mean, let's see what we're trading. So this is, I guess, pretty low here yesterday, actually 1.21 million shares traded, but at $75 a share. But yeah, just a few days earlier, you had 5.29 million traded, average $80 a share. So it's definitely putting up volume. It's not the highest volume name in the quantum space, but it's up there with how people are trading. So keep an eye on that. And last but not least, we'll keep an eye on TAN. So we're down here testing monthly 12 EMA, definitely a solid fall from graces, but you got clear daily 12 EMA rider, daily stair step, gap down. Is that going to be the end? And we've got some opportunity to position on TAN for a potential weekly bounce. Certainly be looking for a weekly lower high, but yeah, once you get smoked off 30% off the highs, you pay attention. And we got clear daily 12 EMA rider. Can be watching TAN SPY for any early clues. Pretty similar chart to the underlying. And that's that. Thank you all for tuning in this evening. And we will see, do semiconductors hold weekly 12 EMA, or is that lost with a daily lower high and lower low to lead to monthly consolidation? And if that happens, then we got to see, that is the rest of the market really carrying their weight and keeping the S&P 500 from getting ugly. And it truly is SMH and memory, and then like everybody else. And it's what it needs to be for the S&P 500 to be balanced, because at this point, semiconductors are such a large portion of the market with their market cap increase. And yeah, large portion of the pie of the S&P 500. But anyways, hope everybody has a good rest of the week, good weekend, and I will see you next week. Farewell.